Okay, we're back. We'll continue. So in this past paper, this is what they require the students to do. Record the relevant transactions given in the debtor's journal. Total only the debtors control column and round all amounts to 2 decimal places. So can you see how important it is for you to read the instructions carefully? Okay, and then question 3.2, prepare the debtors control account in the general ledger and balance the account properly at the end of the month. Okay, so they only wanted the students to do the debtors journal, even though they gave them the transactions that affected the cash book receipts also, they only wanted you to do the debtors journal. Okay, so please do remember that they will give you many different transactions, but you must be able to identify which specific transactions you need to record in the debtors journal for this specific question. But what I did was, so that we could revise also the previous subsidiary journals, like the cash book receipts, I have also then given you the answers for that. Okay. But I just need you to note that in the exam, it does not mean that all the transactions that are given to you in the specific question is what you need to record in the debtors journal. Here specifically, we only wanted you to record the duplicate invoices, okay? But the other transactions, okay, why they gave you all those other transactions is because you need to now use those transactions to do, to prepare the debtors control account in the general ledger. Okay, all right. Again, what you needed to note here, if I just go back to the previous slide, even though we know that the business uses the perpetual inventory system, the markup is 50% on cost price, that for some of the transactions, and of course we know that all the amounts that are given here is inclusive of VAT, we know that unless otherwise stated, but also to note that they have changed the markup for certain transactions. Right. So here is the markup for cash sales. Here we need to use a different markup on the 8th, and then on the 12th we need to use a different markup here, also 40%. But wherever there is not a specific markup given to us, we will use the 50%. Are you with me? So very important for you not to make that mistake. So for the transaction on the 2nd and the transaction on the 19th and the 25th, we will use the 50%, but for the 8th and the 12th, we will then have to use the specific markup that is given here to calculate our cost of sales. And always remember, we only use the markups for our cost of sales, cost of sales. Okay. Um, please, if there's anyone that have only joined now, please don't forget to sign the register. Please, Bev, could you also share the attendance register link so they are able to just sign the register? Okay, right. So let's just again, when we're calculating cost of sales, always remember there are two methods in which you will be able to calculate your cost of sales using the markup on cost method or the markup on selling, also known as the gross margin method. Okay, and when we're using markup on cost, always remember the rule: cost price equals 100. We add our markups, our selling price is 125, and our formula is the given multiply by what you want divided by what you have. So you will have your selling price or sales, and then you must calculate what you want divided by what you have. Okay, for both formulas. Just please remember that. If they say gross margin, then selling price will equal 100. You will minus your markup now, and your cost price will be 75. Okay, just the formulas to use in order to calculate your cost of sales. And this more specifically for cash book receipts, debtors journal, debtors allowance, and also for your general journal. Okay, when you have to calculate the cost price for drawings. Okay, so please remember your formula for cost of sales. So in our cash book receipts, again, what are the transactions that we're going to be recording there? We have identified them according to our source documents. And please, um, from a past test, we've seen that students have lost unnecessary marks for not recording their source document. So please note, whatever source document is given to you in the exam paper, you need to record in your document number, right? You need to put in your days, your details. Who did you receive the money from? Okay, so for Murphy, it was for capital. So we know that for capital, we do not calculate VAT, right? So it goes straight into sundry accounts. Then we had a transaction for key Kumo. You can either write Kumo or cash sales, right? Into the bank amount will always be the inclusive VAT amount. Please remember that, inclusive VAT. And then you now needed to calculate the exclusive VAT amount. Okay, again, there's two methods that you can use. The easier method or the shortcut method is what I've impressed on my class, just to divide by 1.15, going from inclusive to exclusive, or you can use the formula what you want divided by what you have to get to your exclusive VAT amount. Okay, so inclusive here, so you can first start with your exclusive VAT amount, and then to get to your VAT amount, inclusive minus exclusive. Okay, and then this is very important. When you are calculating your cost of sales, always remember you calculating cost of sales on the exclusive VAT amount, not the inclusive sales amount, but the exclusive. Please remember that from Learning Unit 3. When you did your markup calculations, you always worked out on exclusive VAT, exclusive VAT. Okay, and the markup percentage was 20%. So again, to calculate our cost of sales, what you want divided by what you have, so 100 over 120 gave us our cost of sales. Okay. Then for Hood, okay, we were given the inclusive amount. Again, you know from previous exercises that if you do not have a column, like for sales, we had a specific column, it will go to sundry accounts, okay? And we do calculate VAT on the rent. So again, going from the inclusive to the exclusive, divide by 1.15. Okay, and then step number 2, you take your inclusive minus your exclusive, and that will give you your VAT amount. And then the last entry that had to be recorded was the payment from the debtors. Okay, so what was the final amount that you would record into your cash book receipts? Okay, you take the amount that is given to you, multiply by 95 over 100, and that will give you the final payment amount that the debtor will pay and what the business will receive. Okay, right. Please again show your workings, show your workings. Reason being that we give method marks for your workings, so it's very, very important that you need to show your calculations, show your calculations. Right, and again, don't forget your double entry. More importantly, you need to know your double entry for when you are posting to the general ledger. Debit the bank, credit debtors control, credit output VAT, credit sales, credit capital, credit rent income. It will only be cost of sales that will be debited here. Okay, right? So please again, just remember your source documents. So now, remember this was not asked in the exam for this specific question, but I just thought it's important that I recap the cash book receipts again in the event that it could come up in your exam again. Okay. Right. So here our focus is more specifically on the debtors journal. This is what they wanted you to do, was the debtors journal, and that is what we're going to be looking at now. Which transaction should go into the debtors journal? I've also done the debtors allowance in the event that you could be asked to do the debtors allowance. Okay. Right. So please just take note of that. So what goes into our debtors allowance? We know that it's for all credit sales, right? The source document for the debtors journal is duplicate credit invoice. For the debtors allowance is duplicate credit note. So don't forget to record your source documents if you do not want to lose unnecessary marks. The details is the name of your debtor. Into the debtors control will be the inclusive VAT amount. Here it will be output for debtors, input for debtors allowance, and then that is the VAT amount, and sales again will be your exclusive VAT, exclusive VAT. Okay, and your cost of sales will be the markup either at 50%, or depending again on the information given to you in the exam. Okay, right. And again, how are we going to calculate cost of sales? You take your sales amount, which is given to you, the exclusive amount, multiplied by what you won, divided by what you have. Okay, and for this business, they were using the markup on cost method, cost price method. Okay. Right, so again, we have highlighted the transactions that should be recorded in our debtors journal. We had 4 dates. Can you see I've recorded all my document numbers? Right? Okay, there's the dates, the details. Who did I sell the goods to on credit? Rosin, Wonga, Grid, Lint. Right? And then, of course, I showed all my workings, Okay. They've given me the inclusive VAT amount. So again, if I'm going from inclusive to exclusive, step number 1, divide by 1.15. Okay. How do I get to my output VAT? My inclusive minus my exclusive VAT amount. Okay, how do I calculate my cost of sales? I calculate it on the exclusive sales amount. The only scenario that will change when we calculating cost of sales is when there is a discount that was given to the customer. With example, the one on the 12th, I'll just take you back to that one. On the 12th, if you can see here, credit sales less a 4% trade discount. And we had a question mark meaning that we still need to deduct that 4% discount. Okay. Right. So we need to get to the final amount after discount. So after we need to calculate that. And then the markup was on 40%. It was a different markup percentage that we needed to use here. Okay. So let's go back. So that is the final amount after discount. Okay. Again, to get to I always first calculate the exclusive VAT amount, and then I calculate the VAT amount. Okay, so you can again use the easier method, or you can use what you want divided by what you have. Right, but when you're now going to calculate the cost of sales, we have to calculate cost of sales not on the amount after the discount, but the original amount before the discount, but still the exclusive VAT amount. So can you see what I showed you here? I'm working on the original amount before the discount. I divide by 1.15 to get to my exclusive VAT amount. And then I did my markup calculation. Okay, can you all see that? Markup on cost. So cost price will be 100, selling price 140. Okay, right. So please just take note of all the different um, examples of transactions that could come up in your exams. One's with a trade discount, one without a trade discount. Okay. And then the transactions on the 19th and the 25th were um, similar to the transaction on the second. The only thing was that we needed to use the actual 50% markup. Yeah. Okay, because for the second and 12, they gave us specific trans markups to use over there. Okay, sorry. On the second, sorry, it was also 50 percent. It was just for the cash sales that the markup was different here on the 8th. Okay, and then on the 12th, the markup was 40%. Everything else that you then needed to use for credit sales is 50%, 50%, 50% markup. Okay, so again, just remember that if they give you the inclusive VAT amounts, you will then record it over there. Okay. Right. Any questions? And then not forgetting they wanted us to total up this amount. So it means that we needed to add up the amounts in the debtors control, because this is the amount we're now going to post to the general ledger. And you know this double entry: debit debtors control, credit sales, credit output VAT, debit cost of sales. Okay, because when the stock leaves the business, it leaves it at the cost price. Any questions with regard to your debtors journal? Again, please to note, you must show your workings, show your workings, show your workings at all time. Anything you want to share, Bev, before I proceed?
No, I think you've covered it. Mostly, I think obviously they're going to the cost of sales workings. Just remember to revise if they give you markup on selling price or gross margin. Um, but apart from that, I don't think there's anything additional to add into what you've already covered.
Perfect. Thank you. Okay, what I've done is I've just given you another scenario where, for example, now they have given you the exclusive VAT amount. Okay, so also take note that you could, in the exam, they could give you the exclusive amount, and you now need to calculate the inclusive. So please remember, exclusive will go to sales, and into the debtors control will be the inclusive amount. So can you see there now? Now you're going to multiply, going from exclusive to inclusive, you multiply by 1.15. And this you know from Learning Unit 3. In Learning Unit 3, your lectures were revising all these VAT calculations. Okay, right, so just remember that. And then how do I get to my VAT amount? My inclusive minus the exclusive. Okay, and then again, just to calculate the cost of sales, it's on the exclusive sales amount. Okay, so again, just to note that the transactions could be a little bit different in the exams, could not always be that you will be given the inclusive VAT amount, but you could also be given the scenario where they're giving you the exclusive amount, and you now need to calculate the inclusive VAT amount. Okay. Any questions there? Everybody happy with that? Okay. Now the next step is we now needed to do the last transaction in the, we've done cash book receipts, we've done the debtors journal, we now need to look at our debtors allowances journal. Okay, so here's our debtors allowance. We only had one transaction that we needed to record in our debtors allowance. Again, okay, you are guided by your source documents. Please, DCN, duplicate credit note. So you have to know your source documents. Okay, right? The date, it was Wonga. The amount, again, they've given you the inclusive amount, so you needed to calculate. Okay, your exclusive and then your VAT amount. And then you calculate your cost of sales on the exclusive sales amount. Okay, so please just remember that. And again, of course, you use the same markup. If in the debtors journal, the markup was or for this transaction for Wonga, the markup was 40%, then you have to use that same markup again for the return. Okay, for cost of sales. Please just remember that. Okay, source documents, and again, when you're calculating your cost of sales, you use the given, which is your selling price, multiply by what you want divided by what you have. Okay, right. And again, in on your answer sheet, no one is stopping you from writing this, guys. You can write this also on your answer sheet so that you can remember that into debtors control will be the inclusive amount, into the VAT column will be the 15%, and into the sales will be the 100%. Okay. So that was our yes, Bev.
Hi, I just want to say to everybody, just with now, always tell my students, always check your sales amount can't be bigger than your debtors
Yes.
control amount. So just check what you've actually written in your journals and does it actually make sense? So we've gone through, Salama's gone through all the calculations, but when I know what happens in tests and exams, sometimes you do things that you wouldn't normally do, but always just check and see what you've actually put down on the answer book, and does it make sense that your sales amount is bigger than your debtors control amount. Okay, and the same thing for any of the journals that you're doing, your first column should be have the biggest amount in it.
Perfect. Thank you so much. Yes, that's so important. Students, always remember into bank, into debtors control, into creditors control, this amount must be the bigger or greater amount, okay? And into sales, into sundry accounts will be the smaller amount. Okay, very important. Thank you for that, Bev. Right, so now our last journal year that I wanted to was for the last transaction for the settlement discount that was granted. Okay, so again, your source document, don't forget journal voucher, the date, and now your double entries. Okay, right. So you're going to debit sales, you're going to debit input VAT, and you're going to credit the debtors control. Okay, and don't forget, if they want you to give you the journal narration, you have to then also record that. Show your workings again. Into sales will be the exclusive amount, into debtors control will be the inclusive amount. Okay, and as Bev mentioned now, debtors control will always be the bigger amount, and sales in this example will be the smaller amount. Okay, right. And any questions there regarding this? And show your workings. Okay. And please remember, we will give you um, enough or even a certain space on your answer book where we want you to show your calculations. But if on the answer sheet the block is big enough for you to do your calculation, then please do show that for your lecturer. Okay. In most instances on the answer sheet, there is a specific space dedicated for your workings, always, always. Right, so now from the journals now, we will then do the next part of the question, and that is your general ledger. Okay, guys, and this is where you have to remember the debt click rule and also to note your opening balances. Always remember expenses will have debit balances, assets, debit balances, drawings, debit balances, debt click, and then liabilities and income credit balances. Okay, and the rule is that your expenses, assets, drawings increase when you debit, decrease when you credit. And it's just the opposite for your liabilities and income. Okay, they increase when you credit, decrease when you debit. Right. So the general ledger, um, I know most students always found that the general ledger a bit challenging, but try to maybe understand it more like a story. Try to tell yourself what is happening to my debtors control account in the books of my business. I'm the bookkeeper. I'm posting from my subsidiary journals to the general ledger. Okay, and like I've mentioned earlier, um, they will, if I just said now debt click, you know debtors is an asset, it has a debit balance, okay, and in this scenario, the balance was given to us, so you will record the balance, and now you're going to be posting from your subsidiary journals, okay. So you need to understand what are you calculating in this account. You are calculating what is the total amount outstanding by the debtors. So you need to look at what impacts are your debtors. You sold to your debtors, right? Then they return goods. Every month they are paying their accounts. Then we also have some debtors whose accounts go in arrears and we have to charge them interest. So that impacts their balances. And then we also have a scenario where some of our debtors, we have to write them off as irrecoverable. Okay, so all of these specific transactions or that I've just mentioned now will impact how much the total amount will be outstanding by your debtors. Okay, so when I've sold goods to the debtors, so this journal here, debtors journal, Okay, this is for my credit sales. So clearly my balance will increase here on the debit side. Okay, if I'm going to charge my debtors interest for accounts, for their accounts being in arrears, again, their balance will increase. Right, so everything on the debit side. So try to understand it or try to remember it as a story. Right, so now these are the transactions that affected my debtors, right, on the debit side. What will decrease my debtors accounts? Okay, when they return goods, right? So I'm going to put that on the credit side. The balance of my debtors will decrease when they return goods. When they pay their accounts, the balance will decrease. I'm posting from the cash book receipts. When I've given them a settlement discount, their balance will decrease. And if I have to write off my debtors as credit losses, that will also decrease the balance of my debtors in the books of the business. Okay. And then now I have to calculate what is my final balance at the end of the month after I've taken all the different transactions into account. So how do we calculate a balance? I'm sure you know this by now. You'll total up the bigger side or the greater side, and in this case it was the debit side, and you subtract it from the amounts on the credit side, and that will then give you the balance that you will carry down and carry over into the next month. Okay, so please, when you're posting to the general ledger, just try to get a better understanding of what impact will these transactions have on the balance of my debtors. Is it increasing my balance of my debtors accounts? Is it decreasing the balance of my debtors? Okay. Any questions there? Also to note, yes, Isha, I see you have a question. Bev, I see. Um, can you maybe
Good
post?
morning.
Yes.
Hi, sorry. I just wanted to rather say it because I would get a bit confused typing it. So I usually get confused with what specific details need to be put under the details column. So like it always confuses me. I don't know whether it should be balance or whether I should put the
Okay.
um
Yes, I'm with you. Isha.
okay.
Always remember it's the contra account. Okay, of course, you'll first start off with an opening balance if it's given to you. So then debt click, debt is controlled as an asset, so I need to record that balance on the debit side. Okay, now you need to remember your double entry. The double entry for posting this amount to the debtors control was debit debtors control credit, sales credit, output VAT. I'll just take you back to the actual journal. Can remember I put the double entry here, Isha? Can you see? Your double entry is I must debit my debtors control with the inclusive amount and what is my contra accounts? Credit output VAT credit sales. Okay. And in debtors control we put in the inclusive. If I add the reason why we write sales and VAT, because these two totals will equal this answer. Are you with me there? Okay, so you need to remember the double entry. Okay, you need to remember your double entry. So it's the contra accounts that you are recording here. Um, um, Bev will also now assist me there. So always remember when we post to the general ledger, our focus is on the contra accounts. Contra account. What is the other account? If I'm recording the entry on the debit side, what is the credit account's name? If I'm recording an entry on the credit side, what is the debit account's name. Okay, the contra account. Always cross-reference the contra account. Over to you, Bev, if you could just give some input over here. Thank you.
Yes, just remember, as you're shown there, the data's journal, just remember all your journals give you both the debit and the credit entry. So if you remember the columns in your journals, for example, you looked at the cash book receipts in the data's journal in this question. So if you're looking at the data's journal, what are the columns? Your first column is always your VAT inclusive, the data's. And then what are you crediting? Example, cash book receipts as well that you've got there. Your main column is your bank. So in the cash book receipt, you're debiting bank. What are you crediting? And this, if it's debtors control the other accounts, you debit bank, you're crediting debtors. So in your debtors control, what you're going to write, you're going to write the contra account. Where's the other side of the entry? So in the when the debt is paying you, the money is recorded in the bank. So that is what you're going to write in the debtors control. So I always tell my students, if you remember the columns in all the different journals, you should be able to work out the debit and the credit entry.
Perfect.
Okay,
Thank
does that
you.
make
Thank you. Thank you. Isha, does that help? Does it answer your question? For example, also the one, okay, perfect. Thank you so much, Isha. Okay, so remember here, credit losses is an expense. So the double entry was debit credit losses, debit input VAT credit, debtors control. Okay, right. So just remember that. All right, always, and like I told you, sales and VAT. So this is the contra account, and these are also, and as Bev mentioned, just visualize your actual columns in your journals for you to remember the contra accounts. Okay. And also, please remember that we could actually also give you an account and ask you questions regarding this. As you asked me now, you're not sure as to what to write here. So if I had to ask you now, Isha, what is this transaction on the 31st? What are you going to tell me? What is your understanding of that transaction? The one for the bank, this 31,255. Anybody else want to maybe help Isha there to explain what is that transaction that you've posted to this account? No volunteers? Okay, you'd say, for example, it's total payments um, from my debtors that I recorded from my cash book receipts. For credit losses, total of debtors written off as irrecoverable that I posted from my general journal. Do you understand? You must be able to know what the transaction means to the business. This is money that the debtors have paid on their account, and you are recording this from your cash book receipts. Okay. Right. So just please remember that we can ask all these types of questions in a different way, just to see whether you understand what you are doing. Okay. Right. This question, more specifically, the trading inventory, I did not base it on the previous scenario, but it's just again to remind you that you can't only focus on specific accounts, but also all the other general ledger accounts that you've done in question 8 point, in question 4.8, and this one more specifically is trading inventory. And trading inventory is impacted by all your subsidiary journals. Okay, you purchase trading inventory, you return trading inventory, you bought trading inventory not only for cash but for credit. The owner took trading inventory for his own use, and when you sold the trading inventory, it left at the cost price. So you see, you are recording from different subsidiary journals. So please also just remember what is your purpose of preparing this account. The bookkeeper wants to know that at the end, this is the value of the inventory left in the business, and that will be the amount that will be recorded on the trial balance. Okay. All right, so again, just remember your double entry rules. Trading inventory is an asset, increases on the debit side, decreases on the credit sides. And again, as Bev mentioned, just picture again trading inventory in your cash book payments, in your creditors journal, cost of sales, picture it in your cash book receipts, in your debtors journal, in your debtors allowance journal, and just remember the contra accounts, the contra accounts. Okay. Okay, now we need to move on to our um, next activity. So in the previous slides, we just focused on debtors, debtors allowance, and the general journal and the cash book receipts. Now we're going to focus on credit purchases. Okay, so everything regarding credit sales is what we focused on in the previous activity. Now we're looking at credit purchases and returns. So let's just look at the scenario given here. Thabu Mokina is the owner of Thabu Tech Supplies, a sole proprietorship that sells electronic accessories. The business is a registered VAT vendor and uses the perpetual inventory system. All amounts are inclusive of VAT unless otherwise stated. And here again, we've given you the source documents, OCI, the abbreviations, original credit invoice, OCN, original credit note, JV is for your journal vouchers. Okay, round off to the nearest rand. So when we say round off to the nearest rand now, it means there must be no decimals. Okay, and this is what we want you to do. Creditors journal, creditors allowance, cash book payments, general journal, and then post and balance the creditors control account. And I've given you an opening balance. Okay. So in this journals, my focus would be that I need to balance my or post anything regarding creditors to this control account. So these are my transactions again. I've purchased trading inventory. I returned trading inventory. I purchased a flat screen TV for the staff lounge. I did a payment on my account. And then I have some additional journal entries. A debtor declared insolvent, charged 5% interest on the balance of a debtor, and then packing material worth 840 was incorrectly posted to the stationery account. Correct the error. So which two transactions will be recorded in the creditor's journal? Who can tell me? Can you identify the transactions that will go to the CJ? Again, what will help you here, guys? What will help you? Your source documents. Your source documents will guide you. Where am I going to record the first transaction? In which journal am I going to record the first transaction? Okay, I will help you since I have no response. Original credit invoices, those ones will go to our CJ, Creditors Journal. There we go, CJ, CJ, OCI. Okay, not cash book. The only time we will record into our cash book payments is when it's an EFT payment for trading inventory. Okay, so that's a cash payment. Okay, so this will go to your creditors journal. OCN, original credit notes, so that will go to your CAJ. And now the EFT one, that one will go to your cash book payments, right? And then these three, sorry, cash book payments, and then these three, they are journal vouchers. They will go to the general journal. Okay, right. Again, what is helping you to guide you to knowing where to record this? The source document, EFT, JV, journal vouchers, general journal, EFT, cash book payments, original credit invoice, CJ, creditors journal, original credit note, CAJ. Okay, so those are our different transactions. Okay, just again, a summary here to summarize. What transactions do we record in our creditors journal? Anything that we're purchasing on credit. Okay, but we don't only purchase trading inventory on credit. We can also purchase non-current assets like equipment, vehicles, and furniture, as well as consumables, right? And any other expense that is incurred on credit and not yet paid for. Okay, so you have to just remember these are your possible transactions, not only trading inventory, but anything additional can also be recorded into your creditors journal. Non-current assets, consumables, expenses that have been incurred. Okay, so this is your layout of your creditors journal. Again, show your workings, include your source document in the details, the name of the supplier or creditor. In the creditors control, again, it's your inclusive VAT amount. Then you have your VAT amount and then your exclusive VAT amount. Okay, you have the option to use the shortcut method times 1.15 or divided by 1.15, or you can use what you want divided by what you have to calculate the inclusive VAT, the VAT amount, and the exclusive VAT amounts. Okay, so let's just have a look again. What what did we identify here? Which transactions will be recorded? We only have two transactions on the 2nd and the 10th. On the 2nd and the 10th. Okay. For the transaction on the 2nd, will I calculate VAT? Can anyone tell me? Will I be calculating VAT for the 2nd? Yes or no? And for the transaction on the 10th, will I be calculating VAT for that transaction? Can anyone tell me there? Which category will be the first transaction? The minute I see the word staff, anything for the staff, which category will that go under? VAT categories. I'm taking you back to learning unit 3. Anything regarding staff, where will we record that? Or will we record VAT? Where will we, what category is staff entertainment? Very good. Thank you, Tatum. Guys, it's non-allowable. You have to know when to calculate VAT or not. Tatum, are we going to be calculating VAT on the second? So the 10th, that will be non-allowable. And on the second, yes, most definitely there we will calculate VAT. Okay, right. So let's see. There we have our journal, our document number, the day, who did we purchase our inventory from, Digital World Suppliers. Into the creditors control is the inclusive amount. Then you calculate your exclusive VAT and then your VAT amount. Okay. And then on the 10th, anything for the staff is non-allowable, so no VAT. We don't calculate any VAT, and we do not have a column for equipment, so that will go to sundry accounts. Okay, so please just remember that. All right, and again, your double entry. Every journal has a double entry. Okay, so creditors control will be credited and everything else, the contra accounts will be input VAT, trading inventory, and in this case, equipment. Okay, so please remember your VAT categories, when to calculate a VAT and when not to calculate VAT. Okay, then creditors allowance. What transactions do we record in our creditors allowance? Any returns or rebates? And then also any returns or rebates regarding damaged inventory, consumables, or non-current assets, or any expenses previously incurred on credit. Okay. So anything that you recorded in your creditors journal and now they're being returned for reason that they are damaged, etc. So creditors allowance, again, your source document, original credit note, and we had only one entry that we needed to record here. We had a return to Digital World Suppliers. Again, into the creditors control column is the inclusive amount. And I always try to tell the students, if they're not sure whether it's input VAT or output, just remember, anything coming into the business, you're purchasing inventory, input. Anything that is leaving the business, okay, the customer, or the customer is taking the goods, so it's leaving, or you sending goods back to the supplier, output VAT, output VAT. Okay. Right, so again, going from inclusive to exclusive, you're dividing by 1.15, and then inclusive minus exclusive will give you your VAT amount. So again, please show your workings, show your calculations, and don't forget your double entry now. Okay, right? So let's just go back to the previous slide here, where we sold goods on, or sorry, we purchased goods on credit. So our creditors control account is increasing. It's a liability, right? So that's a plus. And now we are returning goods. So what is happening now to our liabilities? It is going to decrease. And you know that double entry rule. Okay, liabilities, sorry, with the creditors allowance. Okay, it's a liability, increases on the credit side, decreases on the debit side. And creditors is a liabilities. Okay, all right. So when I increase my liabilities, I credit it. When I decrease my liabilities, I debit. And that is what is happening here. Okay. Right. I'm posting from the CJ to increase my liabilities, and when I'm returning goods, the balance of my liabilities will decrease. So I'm posting from my creditors allowances. Debit, debit. Okay, then the last transaction, sorry, second last transaction that we had, not forgetting we did a payment now, we did a payment. So we recorded our credit purchases, we recorded our returns, and now we did a payment on our account. Okay, EFT. So where do I record my EFT? CSs in my cash book payments. And please note there is no VAT here. Okay. It only goes into the bank column and the creditors control column. Okay. It's only a payment on account. No VAT to be recorded here. Please remember that. Okay. Source document EFT, the date, who is the business paying, the supplier's name, and again, not forgetting your double entry. Cash book payments now is credit, credit the bank, debit creditors control, debit input VAT, debit trading inventory, debit whatever will be in your sundry accounts. Okay. So there's your double entries, double entries. And now the last transactions, so we've done them all. We've done, so you can tick them off now. So you've done this. So what is left now is your general journal entries. Okay, journal voucher 10, 11, and 12. So those are the three that we now need to record in our general journal. A debtor is declared insolvent, the amount is to be written off as sound. Apologies there. Sorry, it seems like I just lost connectivity. Is everybody still able to hear me? Just please, can I have a thumbs up? Perfect. Thank you, Bev. I don't know what happened there. Okay. All right. So what is that expense account's name? Yes, Ayanda. Did you post your question, or are you going to unmute your, I see you've raised your hand. Okay, so let's just summarize the general journal, all the different transactions that will be recorded in the general journal are the transactions that could not be recorded in any of those other subsidiary journals that we just revised now. Your cash book receipts, cash book payments, petty cash, debtors allowance, creditors allowance. Okay, so what are the transactions that goes in our general journal? The owner contributes an asset to the business, drawings of trading inventory, credit losses, settlement discounts for debtors, creditors, interest charged, and correction of errors. Again, from our scenario or example that we are practicing now, I've only covered maybe 3 of these transactions, but you need to revise all the others, okay? When owner contributes an asset, you need to know what's the double entry for that in the general journal and drawings, okay? Right. And we've done settlement discount, so that should be okay. And in the general journal, please note also the layout of your columns are a little bit different from the previous subsidiary journals that we did. Here we focus on a debit and a credit, not column headings that says exclusive VAT and all those specific columns. Okay, so just please note that. So it's your account name, the debit account's name is at the top, and you will write the corresponding amount there, and then your account that you are crediting and the corresponding amount there in the credit column. Okay, right. So the first line will be the debit account's name and amount, and then below that will be the credit account's name and amount. Okay, so just please remember that, and then your journal narration. That is how we record transactions in our general journal. So it's this three again. Okay, also note guys that when we calculating our interest paid or received, no VAT, and for correction of errors, there will be no input VAT, no output VAT that we're going to be calculating here. So this is how our general journal will look for credit losses. Again, going to the debtors control. What amount is this? Who can tell me? What do we record into the debtors control? Inclusive or exclusive? Always remember it's the inclusive VAT amount. Inclusive VAT amount. Okay, that goes here. Inclusive VAT amount, because in our general ledger, remember this amount is the amount that goes to the general ledger also. So you need to know that into your debtors control and your creditors control in your general ledger, it's only the inclusive amounts that you are recording. Okay, so into creditors control, can you see? I had to get to the exclusive amount by dividing. Okay, so this is the amount that is exclusive of VAT, and debtors control is the amount that is inclusive of VAT. Okay, so just take note of that. I debit credit losses, I debit input VAT, and I credit debtors control. And then how am I going to calculate the interest of this debtor whose account was in arrears for 4 months? So they've given me the outstanding balance, they've given me the interest that I need to charge the debtor, and for how many months. And we all know that there are 12 months in a year. So if it's for this example, Small's account was 4 months in arrears, and that is how I got to the 42. But remember, it could be 3 months in arrears, 2 months in arrears, 6 months in arrears. And that is how you will then do your calculation for showing the interest or calculating your interest. Okay, any questions there? And that is your double entry. Interest exempt, no VAT. Okay, the balance of the debtor will increase. That's why we're debiting it, and we credit interest income. That is our double entry. Interest charge on an overdue account. Journal narration. Please, you have to study these double entries for your general journal for the upcoming exam. Okay, all of them. Okay, I've just focused on 3, but you need to also look at the one for the owner that contributes an asset to the business. Um, the drawings of trading inventory, all the journal entries. If I'm not mistaken, Bev, Where did we do that question? Very good. Question 5.4, question 5.5, question 5.7. All of them there have different journal entries. So please do work through all the activities in your textbook. Please revise all of them. Then the last general journal entry was the correction of error. Okay, let's just go and have a look again. Packing material worth 840 was incorrectly posted to stationery. Okay, so we were not, or the bookkeeper did the entry wrong in the books of the business. They went to debit stationery instead of debiting packing material. So always remember the rule is cancel the incorrect entry and then you do the correct entry. Okay, so if we debited stationery, are we going to debit stationery again when we correct this error? No, we have to credit it. And always remember that if they're giving you a question mark, guys, it means that you cannot use this 840. It means that you need to calculate another answer or another amount. So the amount that we actually want you to calculate here is the exclusive VAT amount, because this amount that is given here is the inclusive VAT. So always remember, when a question mark is given, then it means you need to calculate another answer or an amount. Okay. Right, so please just remember that. So this is what we did. We're going to credit stationery to cancel the incorrect entry, and then we debit the correct account. So debit packing materials, credit stationery, and the question mark means I need to calculate the exclusive VAT amount, and that is the amount that I'm now going to record in the general journal, the exclusive VAT amount. So please remember, exclusive VAT. Okay, and that sums up this activity now regarding creditors allowance, cash book payments, and general journal. Anything you'd like to add, Bev, before we move on to the next learning unit?
No, I think it's been covered. You've covered it all pretty well. I suppose just to say to the students, just to go, now between now and the exam, to do practice, to go over the questions, to make sure that they understand where into which journals the transactions go, and how to actually record the transaction in those journals.
Perfect. Thank you so much. Thank you. Also remember again, you see, because we said round off to the nearest rand, can you see I had no decimals? No decimals. Okay. So please just note again to read the instructions, okay, regarding your rounding offs. So now we need to move on to, again, the general ledger. We're just going to summarize now the creditors control account. Again, remember your debt clerk rules. Remember you're posting from um, relevant subsidiary journals, could be cash book receipts, cash book payments, debtors allowance. But because we are now going to focus on creditors, we're only going to be posting from the cash book payments, the CJ, the CAJ, and the general journal. Okay. Right, so always just remember specific journal transactions will then only be posted to a specific account in the general ledger. Don't forget your dates, your contra accounts, your folios, and your amounts. Again, very, very important. We've noted this even in the past test that students lost so many marks for their folios. Okay, so please remember you must say, I'm posting from cash book post payments, I'm posting from the CJ or CAJ, and always just balance the accounts when required. So here is our creditors control account. And what is creditors in the books of the business? It's a liability, and the double entry for liabilities is increase on the credit side, decreases on the debit side. Okay, again, tell yourself a story. What am I going to be calculating in this account? I'm calculating what is the amount owing to my creditors. Okay, so what will increase my balance? Any purchases that I've done on credit will increase my balance of my creditors. And if my account is in arrears, that will also increase my balance. Okay. What will decrease my balance of my creditors? If I return any goods, it will decrease my balance. If I make a payment on my account, it decreases my balance. If I have a settlement discount, it decreases my balance. Okay. Right. So it's very important for you to understand the transactions that impacts the calculating the balance owing to the creditors. And just remember the double entry rules. Okay, creditors control is a liability, increase on the credit side, decreases on the debit side. And again, these are my contra accounts, contra accounts, contra accounts. Sundry purchases and VAT contra account. Interest expense contra account. Any questions going forward? Okay, right. So after the general ledger, step number 5, we had an answer earlier that someone told us that step number 5 is we need to prepare a trial balance, trial balance. Okay, and I'm sure you all know the layout of a trial balance. We done this in the previous masterclass also. Very, very important for your upcoming exams is to know the layout of your trial balance. Okay. Trial balance summarizes the general ledger. Debt. Again, please, you have to find, this is just a little tip I can give you, Bev. You can also step in here. Okay, we will go through a past paper on how it could be given to you in the exam, and you must be able to prepare the trial balance. Again, just remember the dead click rules if possible. If you're not sure whether capital has a debit balance or a credit balance, or drawings has a debit or a credited balance. Okay, but just remember the layout. The first heading is statement of financial position, and then you first record your proprietary accounts, then your non-current assets, non-current liabilities, current assets, and current liabilities. Right, and then the next section is your income and your expenses, and that heading is the nominal accounts. Right? And there you record your income and your expenses. Incomes have credit balances, expenses have debit balances. I'll just go back again. Capital and your liabilities all have credit balances, and your assets all have debit balances. Okay. And don't forget your folios. And always remember at the bottom, the totals must be equal to each other. They must balance. Right. So let's work through a past paper. Here's an activity. So this is how it could be given to you in the exam. So what can you see here? Okay. Right. Okay, just ignore this. Right. So all the amounts that were given to you here does not say whether they are debit or credit balances. You need to know under which heading will you record this in the trial balance. Okay, again, not forgetting, this is the first heading, Statement of Financial Position section, and which accounts go in there again? Propriety, assets and liabilities, and then the next section, nominal accounts. What goes there is your income and your expenses. Thank you, Bev. Yes, just remember your chart of accounts. Okay, again, in this example that we'll practice now, you'll see that the accounts, expense accounts might be different to the example that I have here. That is why you need to study your chart of accounts. Okay. All right. So here we have land and buildings, machinery. So clearly already you must know that this is an asset. Okay. Asset, asset, asset. Debtors is an asset. Purchases, what is purchases? Purchases is an expense, so E, right? Capital, propriety, drawings, propriety, creditors is a liability, bank overdraft liability, sales is an income, carriage on purchases is an expense, salaries and wages is an expense, and water and electricity is an expense. Right. And the minute you know that, you already can classify where are you going to be putting this. So we know that income and expenses will go to the nominal account section, nominal account, liabilities, propriety, again, statement of financial position, expenses, nominal accounts, assets, statement of financial position section. Okay. So before you already start your question, writing it in your answer book, you can quickly just do this on your question paper. So you know exactly now where to record them so that you don't mix them up. Please remember that if you're going to mix them up and put them in the wrong section, you won't be getting marks for the account name, only for the amount. So you will be penalizing yourself unnecessary. Now the next step is to remember your debt click. Will it be a debit balance or a credit balance? Okay, right. So ready now, you will know. Now you know your debt click assets, they will have debit balances. Am I right? Bev, expenses again, debit balance, capital, it's a propriety, but debt click, credit balance, drawings, debit, liability, credit, credit, incomes, click, credit balance, expenses, debit. Okay, so those are the things that using those little tips will help you to know whether they have debit or credit balances on your trial balance. Right. So let's look at the questions that came up in the exam in the past paper. They wanted the students to say which inventory system is used by this business and true or false. When calculating costs of inventory, will we take the salaries of the office staff into account? And then they wanted the students to prepare the trial balance, providing the correct headings of the two sections, classifying them under the correct headings and indicating the correct balances and then totaling them up. Okay. Total the debit and the credit side. So what will be the first answer? I'm going back again. Which inventory system is used here? Is it perpetual or periodic? And then give a reason for your answer. Okay, who can tell me? Will it be perpetual or periodic? There are two accounts there that guides you as to which inventory system this is. Who can tell me? Purchases. The minute you see purchases on your trial balance, carriage on purchases on your trial balance, then you must remember that this business is using the periodic inventory system. Okay. Right, please just remember that. Periodic. The trial balance contains both purchases and carriage on purchases. And question 4.2, we know that this is definitely false because salaries does not form part of the cost of inventory. Okay, and now we need to prepare the trial balance. Okay, already I've given you the outline, okay, the two sections, statement of financial position section, nominal account section. We've identified which goes into the statement of financial position. Your proprietary accounts, let's go back again. Proprietary assets, liabilities, and what goes into nominals, income and expenses. And there is your answer now. Can you all see that? So I have my two sections. So I will get marks for that. I will get marks for putting the accounts in under the correct section, putting in my folios correctly, recording the correct balances. And then into my nominal, it's my income and my expenses. Again, I will get marks for recording the correct account name or classifying them under the correct section, putting in my folios, and then recording the balances correctly. And then at the end, my trial balance must balance. Okay. Right, so just remember that. You need to know your chart of accounts like Bev said. Okay, if you don't know your chart of accounts, you won't know what are income, what are expenses, what are assets, what is liabilities, and what are your two proprietary accounts. Any questions regarding the trial balance before we proceed? Anything you'd like to add, Bev?
No, I think you've just got to be aware. It's very similar to some of the questions that you had also in Learning Unit 2. Even here, you're preparing the trial balance. Remember, Learning Unit 2, there were some questions where you had to calculate net profit. You were given a trial balance, and then you had to calculate the net profit for that section or calculate gross profit. So just be aware that they could also bring that into account. And then if you just go back and look at some of those, sorry, I was just trying to find them in the textbook, where it does use the trial balance. Let's see. Learning Unit 7, your revision question 7, for example. Sorry, it's also part of Learning Unit. Yeah, so learning, yeah, so it's question 7 and learning unit 7.
Okay.
So have a look at that as well, just a bit of extra practice.
Okay. Perfect. Thank you. But just remember, guys, you need to know your dead click. Dead click. Okay. All right. And maybe what we could also just, I know many of you prepared and studied for this in the test. You weren't assessed on it, so you need to now know that, of course, I still need to do this now because I might definitely get this question in the exam. Okay, so please do study your trial balance. Remember the layout, which accounts go where. Um, don't mix the account names up, okay, because then you will be penalizing yourself unnecessary. Okay. I think it's best that we now proceed to learning unit 3. Value added tax and source documents. Again, I will just briefly summarize learning unit 3 now, because in the masterclass for test 2, I went into detail with learning unit 3, guys. So please just remember you can go back onto the YouTube link that was shared with your lecturers and revise what we did in that masterclass. Okay, more in detail. But again, learning unit 3 focus on VAT. I'm sure you all know what is VAT, the definition of VAT, what is a VAT vendor, when it is compulsory to register for VAT, when is it voluntary, what's the difference between input VAT and output VAT, and when is VAT payable or refundable to SARS. Okay, this is all in your textbooks on, if I'm not mistaken, Bev, the first page of learning unit 3 in your textbook. On page 76, they explain to you everything that I've just done here now. Okay.
I think it's right at the beginning of the textbook. So
Textbook,
if you
yes,
out
page
of that learning
76.
units, yeah.
Yes, page 76. Okay. Then your categories, you need to know all this again because you could get short questions on your VAT categories. Guys, you have to remember we could ask you again what are standard rated, zero rated, exempt or non-allowable items, short questions. Okay. So please do go through this on pages 81 to 82 and also question 3.3 in your textbook. Okay, and again, you've even noticed how important this is for your subsidiary journals. Okay, right, when you have to calculate VAT or not, especially also with regard to petrol, diesel, and paraffin. Please remember no VAT there for that. Okay. And now, also, just remember the different types of source documents, full tax invoice versus a breached invoice on page 85. Just revise that. The different methods of registering for VAT on page 84, cash basis or invoice basis, and then your calculations could come up here. You know, in test 2, we only tested you on VAT calculations. Now we can do a combination of both the VAT and the markup. Okay, and this is an exercise that we will practice now. We've combined the two together, okay, of calculating VAT, but at the same time calculating the markup, whether it's on cost price or selling price method, okay. So again, your formulas, please study that. Cost price plus profit equals selling price minus profit equals cost price, selling price minus cost price equals profit, and then your markup percentage. How do I calculate my markup percentage? It's my gross profit divided by my cost times 100. and my gross margin, gross profit divided by selling price times 100. Okay, so here I've given you a little table. See if you could calculate. I'll give you a few minutes. Bev, can you just help me? We'll time them to see. We'll give them 5 minutes to see if they could get those answers for us. Are you ready with your answers? You can start posting them on the group, on the chat. Or do you need some extra time? Please remember the formulas again for cost price and gross margin. Extra, please, okay? Not a problem, Tatum. I'll give you some extra time. Okay, I think everybody is ready now. Tatum, are you ready to share your answers? Okay, right. So let's The first thing that we'll do here is we look at the markup method, and we will then identify the formula that we'll need to use. Okay. Tatum, do you want to share your answers, or do you can, and I'm going to share mine now. Okay, so again, just remember the formula. When it says cost price, then your cost price equals 100. You add the profit markup and your selling price equals 120. And then remember, you're going to use the formula, the given multiplied by what you want, divided by what you have. Okay, all right. And so you'll see that, did you get 90 as your profit? Everybody happy with this answer that I have? And the formula, cost price plus profit equals selling price. Okay. And then now I've combined it. Now I want you to calculate the VAT amount and then the selling price inclusive of VAT. So again, now I'll use this answer times that to get to my VAT amount, and then I add up the two amounts, and that will then give me my selling price inclusive of that. Okay, so different methods that you can use to get to the same answer. Okay, using the shorter or easier method, or you can use what you want divided by what you have. When it says gross margin, then remember the rule is your selling price is now equal 100. Now you're working from the back to the front. So now you're going to subtract. Here we're going from the front to the back. So we add, going from the back to the front or to the beginning, we're going to subtract. Okay. So 100 minus 25 gives you 75. Right? And then again, what you want divided by what you have, focusing on the given. Okay, and then here the given was this selling price. So you needed to get to the cost price. So what you want divided by what you have. Okay, right. So just remember that. And then again, calculate your 15% VAT, and then you add it up, and that will then give you your inclusive VAT. So just remember, there's different ways in which we could assess the markup and VAT in Learning Unit 3 separately or together. And I'm sure you've seen this from all the past exam papers also. Anything you'd like to add here, Bev? Maybe some tips for them to just remember when doing VAT and markups?
Um, I think also it's just obviously to make sure that you are reading the answer book correctly and actually that you're not just assuming that you're starting off with cost price or with the selling price, to actually look if they give it to you in a table format like this.
The
Um,
headings, yes,
yeah,
very
to make sure
important,
because
yes.
yeah, because in the test we did find I think it was this group um,
Yes,
if they start off with that inclusive cost price, that you're actually paying attention to what you're actually being asked to calculate. Um, and then just remember, obviously, gross margin, that's the same thing if they give it to you as percentage of selling price.
price.
So basically, if you've got a gross margin of 25%, it's the same thing as saying 25% of my selling price is my gross profit. So they might not give it to you in a table format. It might be something else where you've got to identify and actually use these formulas to actually do a calculation. Um, so always just remember what the formula actually means. For example, also 20% on cost price. They're basically saying 20% of the cost price is your gross profit.
Profit.
So pay attention, I think, to what you're actually being asked to calculate.
And yes, very important is the headings. Yes. Okay, I think we have experienced that in the past. Students did not look at the headings and just went to do the calculation. Okay, and yeah, so if they give you the inclusive VAT amount and you need to get to the exclusive, then remember now you're going to divide by 1.15 to get to this answer. Okay, so just please remember to always check the headings, and this is not only for this question, but also for the journals, because we've actually picked that up in test 2, where they actually, Bev, can you remember? It was first the cash book payments and then the cash book receipts. So always just remember to
Yes,
check
yeah.
your headings on your answer sheets, okay? That you are recording the transactions in the correct journals, or even here now in the correct columns, okay? We know in most instances you know how to do the calculation. It might just have been that you did not read the column headings correctly, and now you've put the answers in the incorrect columns. Okay, so please just to do check that so you do not lose unnecessary marks in the upcoming exam. Right, now we're moving on to Learning Unit 2. Again, we've actually covered the accounting equation in the previous Learning Unit also, Learning Unit 5. Remember, I did go over the accounting equation, and we focused on the double entry in the general ledger. So again, you are familiar with your chart of accounts, okay? And here again, you need to know your chart of accounts, okay, in order to know the impact it will have on your accounting equation, assets equals owner's equity, liabilities. But more importantly, in Learning Unit 2, you were introduced to so much theory. I'm sure you are aware of all the definitions, so please again, when it comes to formal IFRS definitions, you have to actually give us those definitions as in the textbook, word for word. Am I right, Bev? Maybe just here and there we will be a bit lenient, but with a formal
Yeah.
IFRS definition, it has to be given as in the textbook in order for you to be given the full marks. It's only where we will say explain in your own words where we will be very lenient. But for formal IFRS definitions to be allocated the full marks, we need it to be given as in your textbooks, and I'm sure your lecturers have told you where to find these definitions. If I can just go through Learning Unit 2 again, it's the little definitions that are in the blocks and they're highlighted as the heading says definition, definition. So that is the IFRS definitions that we are referring to from page 26 going forward. Okay. For income, for expenses, assets is on page 26. The liabilities is on page 28. It's the definition in the little block and it says definition. Okay. Then your chart of accounts, again, you could get a little table as in the activity in your textbook where you need to highlight whether these accounts are assets, liabilities, income, or expenses. Okay, so again, please study your chart of accounts on page 52. You could be asked short questions here regarding your different classifications of accounts. Question 2.6, so please do revise that again also for short questions. And then, okay, we need to do some practice now regarding Learning Unit 2. There's two ways in which you could be assessed here again. Either they could ask you to analyze transactions of the accounting equation or an activity similar to question 2.4 or even the revision activity that I think you mentioned earlier, Bev, question 7.
Yeah.
that could be a question that could come up where they actually give you the trial balance or they just give you the balances and now you need to calculate. Okay, I've only wanted you to calculate your total expenses, total income, and the markup percentage. But you could be asked to calculate total assets or just calculate the total current liabilities or calculate total current assets. Okay, so that is why you need to revise the other questions also. Question 2.4 in your textbook and then the revision questions as well. So from this activity, let's have a look over here. Again, what do you need to know? You need to know your chart of accounts. Okay, so clearly if you're given a question like this in the exam, a tip would be again quickly on your question paper, you just write down now what are your expenses. And I just tell my students write an E for expense and write an I for income. Am I going to write capital, drawings, equipment? Are these income and expenses? No, we know these two are propriety accounts, okay? P, equipment, trading, inventory, debtors, those are assets. Mortgage, loan, creditors, these are liabilities. Sales is an income, so there we have an I. Cost of sales is an expense. Rent income, I. And then these are your expenses. Are you with me, guys? Can you see that? Right. So just please note that these are the things you need to know. You need to know what are incomes and expenses as per your chart of accounts. Okay, incomes and expenses. And you can see here there are many different expense accounts and many different income accounts. I've only just given you two which is sales and rent income, and just giving you a few expenses. Okay, right? So we're going to calculate our total expenses. So that will be our cost of sales, salaries and wages, advertising, and telephone. Okay. Do you quickly want to do that calculation for me and see what answer you've come up, and for the incomes as well, the two that we have there? Okay. I've given you a few minutes. Are you, who's willing to share their answers for total expenses and total income? So it's the 80,000 plus the 20 plus the 2.5 plus the 1.2. That will give us our expenses, and then our income is the sales plus the rent income. Okay, so are you happy with that answers, guys? Did you get the same answers that I have here for total expenses? Everybody happy there? Perfect, thank you. Okay, so you've got that answer. Total income, are you happy with that? Okay, Zintle, yes, you've got a question. I've got a hand up from Zintle. Oh, perfect. Not a problem. Thank you. Okay, so there we've calculated the total income and we've calculated the total expenses. But that's not the only question. I also wanted you to calculate the markup percentage and I want you to show the formula. And I remember sharing this formula with you in an earlier slide. Do you still remember how to calculate um, the markup percentage? What is your formula? Okay, I'll just take you back and let me just see. Oh, here we go. Can you see here? Remember I told you to study these formulas. So this is the formula for markup percentage. You take your gross profit and you divide by your cost price, which is also your cost of sales. Or if they ask you to calculate the gross margin percentage, that is gross profit over your selling price times 100. Okay, all right. So to get to the markup percentage, I need to first calculate gross profit. How am I going to calculate my gross profit? Do you still remember how to calculate gross profit? Which two amounts are you going to be subtracting from each other to get to the gross profit? Okay, how am I going to get to my gross profit? Very good. Sales minus cost of sales. Well done, well done. And are we given the sales and the cost of sales over here? Yes. Can you see that, guys? Here's our sales and here's our cost of sales. Okay. So what are we going to do with these two amounts? We have to subtract them from each other to get the gross profit, and then we can calculate the markup. Okay. So very important for you to show the formula, okay? And then you do your workings or your calculations, right? I'll just go there. So please just don't forget to revise those questions. So here we have gross profit divided by cost price times 100. How am I going to calculate my gross profit, my sales minus the cost of sales? And then I take my gross profit divided by my cost of sales times 100. I can round it off to the nearest rand or to a decimal after the comma. Everybody happy with that answer? Okay, so what do you need to remember here? It's the formula, guys. And these formulas, am I right to say, Bev, we've done them in numerous examples in
Yes,
Learning Unit
yeah.
3. Guys, you have to revise that in Learning Unit 3. Okay, on page 94, page 94, 95, and page 97. That question 3.7. Okay, there we you have to solve the following problems. Calculate gross margin. What is the corresponding markup? Okay, you have to remember the formula and then you are able to calculate the answer. In this case, we wanted markup, but as Bev also mentioned earlier, if we don't ask you for markup percentage, we could also ask you for the gross margin percentage or markup on selling price. Okay. Okay, the accounting equation, I'm sure you are well aware on assets equals owner's equity plus liabilities, that your left-hand side must equal your right-hand side. Okay, and always check that it balances each other. Okay, and again, from your cheat sheet or summary sheet, again, always remember to use this when analyzing your transactions, that assets increase with a when you debit it, decrease when you credit. Owner's equity, what increases owner's equity? Capital and income with a plus, okay, right? And what decreases the owner's wealth or owner's equity? Drawings and expenses. What increases liabilities? They increase on the credit side, decrease on the debit side. Okay, so just remember that. So again, we'll just practice an activity from a past exam paper. So this came up in a past exam paper. Maybe you've already done this practice activity with your lecturer in class. Okay. Yeah, again, the question was given in a different manner where you just needed to complete the missing blocks. Okay, filling in the missing blocks, and wherever you saw A, it means you needed to give an answer there, and then B, okay, and C, and going forward. Okay, right. So this was debit drawings, credit trading inventory. And we know that the accounting equation must be in balance. So if I've got a minus 5325 here, what am I going to have for A? It has to be the same amount, okay? Because the assets must equal owner's equity plus liability. So here also minus 5325. Okay. Here the missing block for B was the sign. Here you had to say whether it's a plus or a minus. So you see the little first block is the symbol or sign minus plus. And then here you had to give the amount. So B, here's the double entry. You bought stationery on credit. So it's debit office stationery, credit, creditors control. So again, what are we going to put for B, C? What will the answer be there? What symbol will it be? Okay, so you see you have to show the pluses or minuses or the debits or credits or the amount, or provide the correct name of the account, the contra account's name. So here I provided an amount. Here I'm going to provide a symbol and an amount because I've already got the account names. Okay, so will this be a plus or a minus? Who can tell me? Will it be a plus or a minus? Um, my liabilities, yeah? Will it be a plus or a minus? My double entry is I'm debiting office stationery and I'm crediting. Okay, it's a plus. Very good. That will be a plus. Okay, so that is what we wanted you. It's just a different way again in which we could assess the accounting equation. Okay, again, you know this. It's just we assessing you in a different way. Okay, maybe a little bit different from the one in your textbook, but it's still having to show the same things. Okay, so here we want you to say it's a plus. What will C be now? What will the amount be here for C? Will it be the same amount or a different amount? Same. Well done. Okay. It will be the same amount. Same amount. Okay. All right. So that will also be 1,500 Rand. And then D and E, I think I gave you that answer. Yeah, you needed to know the double entry. Okay. The business is purchasing stationery on credit. Okay. Right. So D will be debit and E will be credit. Debit office stationery, credit creditors control. Okay, so this is how they wanted you to answer this question. Okay, filling in those missing blocks either by an account name, a sign, debit or credit, or an amount. Okay, right. So if it's in the first little block, it's a sign. This is the amount. And then this again here with D and E is what you had to show here. You see, debit drawings, credit, trading inventory. So you just needed to know now that below this you need to show the double entry. D will be debit office stationery, E will be credit creditors control. Okay, so then the missing answer again was F, G, H, I, J. So again, look at what is given to you here. What is the double entry here? These were goods returned by the debtor. Can you see? Sales return, debtors control. So goods returned by a debtor. So what will be the double entry for when goods are returned by the debtor? Okay, so here I have my sign. It's a minus. So what must my sign be over here? Also a minus, very good, for sales return because it's an expense, decreases owners' equity, right? Okay, here the sign is a plus, so what will G be? A plus. Well done, that's correct. And H, what is the amount? Now you have to give an amount here. What will the amount be? Okay. It will be will it be a different amount or the same amount as this amount that's here? There we go. So you record the same amount over here. Okay, right. So that will be your answer. Now they've given you the debit. Now I is name the account name. What is the correct account name? They've given you this one's name here. So you now need to give this account's name. The goods have been returned by the debtor. Okay, right. Trading inventory, very good. Yes, debit. Trading inventory, credit cost of sale. So that will be your credit entry. Okay. The cost of sales will be the credit entry. Okay. So please remember that just another way in which we could assess the accounting equation is for you completing the missing blocks. Okay. All right. So there we have it. Okay, right. Trading inventory credit plus minus debit credit. There's all the correct answers. Right. Now we have to move on to learning unit 1. So that wraps up. I'm sorry, maybe I could just before I actually move on to learning unit 1. Sorry, Bev, is there anything you would like to add on for accounting equation or any tips for the students here?
No, I think we've covered it. Obviously, just remember which we did right at the beginning of the session, the difference between the perpetual and periodic stock. And then obviously we haven't dealt with it here. Remember VAT. If the question includes VAT, but always double check. Don't just assume it will include VAT. Always check and make sure you've read the question carefully. Um, and remember, if there is VAT involved, then VAT output is a liability, whereas VAT input is an asset.
Is it?
So I would just make sure that you do some practicing on accounting equation where there is VAT involved as well.
Perfect.
But apart from that, yeah, nothing else really to add.
I think the revision with the VAT question could be, isn't it question 4.8? Also, where we did the
Yeah, I think there's also a question 4.6, which was just going through that example.
example, yes, the actual example with the accounting equation.
Yeah, and then, yeah, I don't think I was
Question
just trying to think.
4.3, I see question 4.3 has the accounting equation on it also.
Yes, as well.
Yes.
Yeah.
Okay, and very good, just what Bev said. If it's periodic, then of course it's purchases. So just remember that. Okay, all right. The account name is not trading inventory, but purchases. Okay, so for learning unit 1, again, an introduction to business bookkeeping and accounting. This was where you were introduced to the language of accounting, a very important double entry rule, so many concepts you were introduced to. So yeah, lots of theory questions, okay, lots of theory that you need to focus on here. Here you need to revise your double entry accounting, Luca Pacioli, what are the users and uses of accounting information, or who are the users and uses of accounting information. On page 4 and 5, your customers, your suppliers, your investors, okay, so just revise that again. What's the difference between GAAP and IFRS? What are your qualitative characteristics of useful information? Different business forms, but more specifically, our focus was on the sole trader, and then the little table on page 13, the difference between financial and management accounting, and then your bookkeeping and your accounting cycle on page 18, and then the definitions. Okay, so please do revise learning unit 1. Okay, for again, possible short questions could come up in this in the exams based on all your learning units, but also more specifically learning unit 1. Okay, so what type of short questions am I referring to here? Again, true and false, missing information, or selecting the correct words, matching the columns, choosing the correct answer, or even just definitions. Okay, right, could come up also again here. So I've looked at question 9 in your textbooks. I see, of course, maybe if you can't see it clearly here, you can always have a look at the question in your textbook. I actually took this out from your textbook, revision question 9, just to give you again an example of questions specifically focusing on learning unit 1, and this comes on page 218 to page 219. If you can go to that in your textbook, right, there you will see is it is choose the correct or match the description in column B to the appropriate term listed in column A. Write down only the letter of the answer in column B next to the number of the principal listed in column A. So just an example of, again, type of question you could be assessed on specifically just for learning unit 1. Okay, so in learning unit 1, yes, you will have to revise and study the theory because you will get possible short questions coming from learning unit 1. Okay. I'm sure by now you know what is the sole proprietorship. I can give you a few minutes if you want to, just to see if you could answer this questions. A sole proprietor. What do you think? What is the answer for sole proprietorship? H, very good. That's right. That one is H. Well done. Well done. Data must be relevant, flexible, and timely. That one is E. Well done. Management accounting. So can you see how it's so important that you're going to have to revise learning unit 1? What is IFRS? What does IFRS stand for? IFRS? IFRS. What is IFRS correct? F. Please remember it's standards, international financial reporting standards. Okay. Government, shareholders, employees, what are they? Government share. B, very good. They are the users of financial information. Very good. What is materiality? Very good. Materiality. I'm sure you know that. What is materiality? Materiality. Very good. All right, that is correct. Information whereby omissions or misstatements could influence. So this is one of your qualitative characteristics. Okay, markup on cost of 25%. What is the correct answer for that? The correct answer is C, same as gross margin of 20%. Okay, so that answer is correct there. What is a trial balance? I'm hoping you know what is a trial balance. Trial balance. Very good. Showing a list of balances. That's correct. Owner's equity decreases. When does owner's equity decrease? Answer is J. Expenses, withdrawing cash for wages. That decreases owner's equity. And a current bank account, 9.9. That is G, correct. Very important here, guys. A current bank account um, can be disclosed either as an asset or a liability, depending on whether the balance is favorable or unfavorable. It's a favorable balance when it's debit, and it's an unfavorable balance when it's a credit. Okay. Right, so just remember that. And the last one, legal personality. I. Well done. Well done, guys. Okay, so there, I think most of you got 10 out of 10. Well done. Well done for that. So that actually wraps up our session for today. I think you could give, for those that are still online, please just give a thank you to Bev for joining us. Anything you'd like to add on, Bev, for Learning Unit 1? I know it's a lot of
I
theory that they need to
yeah,
study.
there's no real shortcuts. Just really, you've just got to revise the material. Make sure that you do, the things like, the bookkeeping cycle, those definitions at the end of the chapter of Learning Unit 1. Yeah, it's just there's no real shortcuts. Just revise it, go through it, and have a look at it, and yeah, test yourselves before the exam.
Perfect. Thank you so much. Again, any other questions before we end our session for today? Just good luck for your upcoming exams. I know that you will be giving your best. Okay, just practice every day, revise every day, work through the past test papers, work through the past exam papers that your lecturers have uploaded for you, and work through the activities in the textbook. With accounting, the more you practice, then there can only be success at the end. Everything is just dependent on you practicing for the next few days, every day till your upcoming exam. Anything you'd like to say to the students before we end of today's session, Bev?
No, I think you've said it all. I can just also just wish you all the best. And as Lama said, it's practicing. Make sure you understand the basics, and when you're in the exam, make sure that you're reading carefully through the questions so that you actually do what is required of you, so that you can score the maximum marks. Okay, all the best, everyone.
Thank you, Bev, for joining the session today. All the best, students. We know you're going to make your lecturers proud, okay? And please just go into the exam feeling confident and just give your best. Thank you once again for joining today's session. If there are no further questions, we will then end the session. But please, we still have a few minutes left. We have 5 minutes left. If there's anything you want me just to go back on, I can do so. Any particular slide, you can just, and then we will still be here for the next 5 minutes.
Hello, ma'am.
Yes, yes, my dear. Hello.
I just wanna know if the session of tomorrow is still maintained on campus.
On which campus are you from?
Something.
Centon, and you want to know if you need to be on campus. I'm not aware of that. Bev, I
As far as I'm aware, I mean, if you want to attend the campus sessions as well, it's up to you whether you attend the sessions or not. Obviously, if you feel like you need additional help or assistance, you're
assistant
still not sure about something, then obviously you can attend.
tent. Perfect. Thank you so much. Yes. So you
Sure.
please do attend the session on campus. Every additional practice will definitely contribute to your success. Okay. That goes across all campuses for all the students. If your lecturer is going to have a revision session on campus, please do attend those sessions, because like we said, the more you practice, it will just make it so much easier for you, and you'll feel more confident going into the exam on Friday. Okay, be on time, please, everybody. Try to be at your venue. One important thing I should have noted also is just be on time at the venue, so that you do not make it or penalize yourself for coming late, because then you're having less time to complete the exam also. So very important to note that you have to be on time. Okay, if there's no other questions, anything else before we leave? We still have 2 minutes left. Okay. It seems like there's no additional questions from those that are still online. Please, for those that are online, if you could please just leave the session now before I end the meeting. Thank you very much. Thank you, Bev, once again. Thank you for all the assistance today. It's much appreciated, and I'm sure the students also benefited from it. All the best, guys, to everyone. Okay. Thank you.